The S&P was down 19 yesterday, the NASDAQ down 37, and the Dow was down 144. But the story seems to be now, is politics mixed up with the possibility of General Motors having an initial public offering? Doug Adler, stock expert, is on the other end of our line. Good morning to you.
Hey, good morning, Michael Patrick.
Well, GM files for the IPO, and by the time the 30 to 60 days go by, we're pretty close to a general election. Is that a coincidence?
I think not. Obviously that's a guess, but one would have to think that they want to get some wins, the administration, going into the midterms. Obviously, you know where the tide's at, and that was a pretty excitable moment when they came in and did the deals with Chrysler and General Motors, and looking to be paid back now.
Do you think, now some people are saying no matter how desperately management might want it and the political calculations demand it, there is evidence that this is the wrong time to unwind the government stake in General Motors, that it's the wrong time to have an initial public offering. What do you think?
That's my sense as well. They've had a couple of good quarters in a row, but how many bad ones in front of that? And I think certainly institutional type investors, when they take a hard look at a deal like this, Michael Patrick, you can't help but come back to the fact that, do I really know that they've turned the corner? Do you really have a good feel for the operational efficiencies that they picked up? And the question, I think, is pretty simple. How much better can they be in a relatively short period of time? Sure, they can be better, and they're doing better, and they've got nice product now. But as an investor, how convinced am I that I want to put my capital into something like this? And I think that's a bit of a struggle. I mean, certainly if there was a better track record or a longer track record since the bankruptcy, people would be more inclined to invest in the company. And what that means to the government and to us as taxpayers is that the offering price would be higher. And maybe they get $15 a share trying to get something done by November. And if they wait and the company continues to execute, maybe they'd get 25 in the first quarter of 11, something like that. So that's kind of the push and the pull and the debate that I think goes on.
Well, you got slumping consumer confidence, right? You got a jittery stock market, only 2 profitable quarters, and really there's still management turmoil. We're dealing with Ed Whitaker stepping down, a new CEO coming in. Maybe it's a rush. That's just the speculation.
No, I think that's right. I mean, it certainly doesn't feel like a stable management environment. And, if you think back, and granted, today economically we're not where we were at in the fourth quarter of 08 or early 09, but there wasn't any initial public offerings happening because there wasn't any appetite for it from investors. And, as economic data has been pretty tepid, certainly over the last several months, the stock market, you mentioned yesterday, was another volatile day. We've had a lot of what we call distribution days recently, which are not positive. And if this kind of climate continues and they launch this deal into kind of a sour, dour public mood, usually you don't do too well in terms of price. And ultimately that's what this should be about, is getting the best price we can.
Okay, thank you very much for the chat this morning. We sure appreciate it. That's Doug Adler, stock analyst from the Lansing area. Jim Trebilcock from Trebilcock and Danick Financial on the other end was listening in this morning too. And what would you say, Jim? Some of your clients were speculating about the idea of investing General Motors on the initial public offering.
Hi, how are you doing?
Good morning.
Well, I'm not allowed to comment specifically on things like that, Michael Patrick. So I really don't have a comment on that particular part of it. I was listening to your last caller, and everything that the two of you were talking about certainly makes a lot of sense in terms of the timing of this IPO and the situation we're in the economy and that sort of thing. And he did really make a good point about the few number or lack of IPOs during this period of time. It really does speak to the public's willingness to invest in new ventures that have risk, and the automobile industry clearly still has risk.
And what you do for people is to minimize their risk and maximize their investment and make them realize, I think, if I'm not mistaken, I don't want to speak for you, but there's a lot of people who watch CNBC and come in and say, hey, I hear Monsanto is going to be big this year, let's get in on it. And I don't know if you urge caution in situations like this. Or
dealing with specific clients, again, I can't make a public specific comment about this IPO, but in dealing with our clients, if somebody does come in and suggest that we purchase something for them that we consider to be too risky based on our understanding of what their investment goals are, then we would counsel against it. We would do some research and counsel against putting them into a position that doesn't mesh with what it is they're trying to accomplish.
Well, that's what it's all about, isn't it? Having a diversified portfolio that complements each other?
Yeah, absolutely. It tends to reduce volatility. It tends to give you a better opportunity to get the kind of returns that you're looking for in order to meet your goals. Diversification really helps people in not having too much of a focused portfolio that can really look good during good times, but can really take a huge hit during the times that we had in 2008.
Having said that, can't you traditionally make some money on day one of an IPO if you buy in and then flip it?
Yeah, actually, it's a fairly common occurrence for an IPO to come out and have the price really spike the first day or two, and oftentimes it comes really fast back to earth and below the offering price after a couple of days. So yeah, if you have access as an investor to IPO shares, you can sometimes do very well with it. Google would be a great example, although Google never came back down.
Yeah. Do you think that, will it be difficult to get access to the General Motors IPO?
I don't know. What typically happens, this is so much different than what you would typically see with an IPO, but what typically happens is the underwriters will have a certain number of shares associated or assigned to them, and it's their responsibility to dispose of them through the sale. And then they go out to the broker-dealers of the world, and the broker-dealers get a certain consignment, and then the broker-dealers make those available to their clients. So it's really, you never know how many shares you're going to have as a broker-dealer until it finally, the deal is done. And this is so different because of the government's involvement in selling their shares that I really have no clue on what's going to happen with this one.
We'll stay tuned then, and we'll see you at Trebilcock and Danik Financial in the Lansing area. That's Jim Trebilcock.